Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and the market's trying to tick back up a little bit. We've got a 318 XRP. The market is about to go back up over 4 trillion. This thing's just hanging in there, and it acts like it really wants to go. Here's the inflation information today.
We came in line month over month for July. The headline number, a jump of 0.2%, 0.2% month over month. But year over year, the headline number coming in lighter than expected, 2.7%. The expectation was 2.8%. The core month over month, that came in line with expectations, a gain of 0.3%. The core year over year, smidge higher, 3.1%, but the expectation was 3%. As for that owner's equivalent of rent, primary residences, that was a...
Okay, that's enough of that. But people are saying September rate cut odds surged to 90% following the report today. And here's what I think. It looks like we're going to get rate cuts, XRP ETF approvals, and the Clarity Act all at once, right around September, October. That's where we're headed. Now, we've got ourselves StableCoin Wars. Here's Jeremy Allaire. What was interesting is first CNBC had Jeremy Allaire from Circle on this morning.
Base layer of digital cash on the internet needs to be as safe as possible. And I believe that, the bipartisan policymaking, I think leadership from the administration has set in federal law that stablecoin money is going to be this very safe, fully reserved form of money. When you have money moving at the speed of the internet everywhere in the world, you need it to be as safe as possible. And short duration treasuries, there are multiple eligible forms of collateral for these, but it is at that short end, right? And cash as a kind of cash-like instrument. Now, I think the view that this crowds out the ability for lending to happen, I actually think is a mistaken view. I think that when you have super high velocity, very high utility money, people are going to want to borrow that. And I think we're going to see very robust credit markets develop that are operating on blockchain networks. And we'll see actually more efficient credit delivery with more transparency, more supervisability. We actually think we can get to a safer financial system with more effective credit delivery built on this new kind of stablecoin.
That almost puts something like Bitcoin in the permanent class of just a store of value. Because I could argue that you call it safe. Yeah, safe, except for the devaluation, continual devaluation of the dollar as time goes by. You're talking about safe for near-term transactions and absolutely safe. It stays at $1, but the dollar itself in 10 years is worth 70 cents.
Yeah, well, I think there's sort of
there's the two macro, things you're worried about.
The macro view over the kind of fiscal.
But you could never do a stable coin based on Bitcoin.
That's correct. I mean, essentially, what we see, in fact, as a major growth driver in our business is the internationalization of these digital dollars. And you even hear that from President Trump, Secretary of Treasury. We want to export these digital dollars. We want to put them in the hands of people who want to hold them and transact with them.
Right.
So that global demand is very real. And I think, this is a kind of currency competition on the internet versus China versus other markets. And this is a technological weapon to compete. And it turns out also that people don't want to hold a volatile crypto.
Now let's talk about why he's going to lose the stablecoin wars. This guy is from World Liberty Financial. They brought him on after Jeremy Allaire, and the shots were fired.
Unlike our competitor, we have no long-term rev share deal with any of our distribution partner. So while we're only 1/30th the market cap of Circle, we are already far more profitable than they are. Now, that's because Circle and Coinbase made a deal a long time ago that Coinbase gets 60% of the revenue that comes from Circle, regardless of what happens in perpetuity. USD1 is completely chain and distribution partner agnostic. So all of the listings, all of the Binance listings and all the other exchange listings that we have was earned business, whereas Circle pays for play. Because Circle is owned by Coinbase, other exchanges don't want to work with them. They're being paid to work with them. But they view working with Circle as doing a deal with the devil because they're directly supporting their competitor.
What do you really think?
I mean, I'm just telling you the truth. It's a USD1 future.
It's an RLUSD future. Here is Monica Long talking about it.
To launch a Ripple dollar stablecoin, we saw two things. one, which is the reality that the stablecoin market is big and it's getting bigger and bigger. So from a few $100 billion today to growing to, 3 to 4 or 5 trillion, depending on what forecast you look at, dollars in market cap over the next few years. And that's because I think the world is really embracing and realizing the use cases for stablecoins beyond just speculative crypto asset trading. The second reality is that stablecoins have been central to our payments business. So, to use blockchain to make cross-border payments a lot faster and lower cost, we've been using stablecoins for a while now. And so, the more ownership we can take of our product suite, the better. I think there's two kind of long poles to making stablecoin payments the norm or to make them really explode in growth globally. One is connecting blockchains to domestic systems. And that's really, that's been the hard work of Ripple over the past, several years, is building the network itself. And, you know how it is in payments. There can be many different ways to achieve that through different strategies. But the second key thing is, I think, liquidity. So you think about FX markets in 2024, there was upwards of $200 trillion in FX volumes. But in stablecoin volumes, it was like $25 trillion, mostly through speculative trading. So the next challenge that we have as an industry is to now create the breadth and depth of liquidity for stablecoins across key currency pairs like AED and others. Ripple owns many XRP tokens. We also staff a team of core ledger developers who are always, continuously working on and innovating with the ledger. So I think, one, we have always been working in service to build use cases that make use of the attributes of the XRP ledger. So that's why we've been focused on payments from the beginning, because it was always kind of built for payments. And yeah, I think that having the competencies in-house between, blockchain development as well as the commercial teams building the solutions on top of it has been.
Now, this tweet went around yesterday, and the guy said that these banks were using code names for XRP, and the code names they use are on-demand liquidity nodes, real-time cross-border netting, instant regional clearing, tokenized liquidity rails. And he showed where the Barclays, HSBC, DBS, and Wells Fargo, he's naming them by names. So now you know the XRP code names. I went and checked to see if I could see any indication of these code names in any documentation. HSBC, this is from December 2022, right here, distributed ledger technology solution for the netting and settlement of FX transactions and payments. Looks like he's close to the target. Macro strategist Gert Van Lagen says XRP ready to rip, sets $34 as first target as 7-year double bottom retest completes. We've got a target of $34. I like the sound of that. Look at this, the playbook. This is from Visa CEO.
Jim, payments, you need 3 things. You need trust, you need ease of use, and you need scale. And the reason why we have close to 5 billion Visa credentials around the world, the reason why we have 14 billion Visa tokens around the world, and the reason why 150 million merchants around the world depend on Visa to grow their businesses is because nobody does that better than Visa. And if stablecoins become a mode of currency that people want to embrace around the world, we will enable that on the Visa system and scale that to those billions of endpoints. That's what you need to do well in payments. That's what Visa does better than anybody in the world.
Uh-oh. Enter Visa. Chris Giancarlo tweeted this about the Canton network. Incredible. Canton capital markets leaders just made 24/7 on-chain institutional financing a reality on Canton. Saturday marked the first enabling real-time, full on-chain financing of U.S. Treasuries against USDC. And then it goes on, money never sleeps. It says members of the working group focused on advancing tokenization initiatives include, right there, I went into the article. 3 of the members are Bank of America, DTCC, and Hidden Road, which Ripple acquired. Go figure. Okay, we're going to go into the group. We're going to talk about Federal Reserve 2.0 and why crypto is Federal Reserve 2.0. We're going to show you what happened and what's happening now. And we're going to cover some other things too. You can go to daixrp.com, which is the Patreon. If you'd rather join through YouTube, click join below any of these videos, or you can hit subscribe through X to join. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Away we go.